Bitcoin and the majors charge out of the gate on the opening bell, climbing steadily up into the atmosphere with beautiful green candles this glorious Monday morning. However, we have to remember the atmosphere around here on planet Bitcoin is thick with smog and full of flying bears. So is this a reactionary movement off the bottom to be shorted into, or is this the first sign that strong hands are bringing the market back, as new evidence from the HODL bans would seem to suggest? Meanwhile, Tether is back in hot water, as new reports seem to indicate that the market manipulation is fairly clear, and a lawsuit to boot on top of it. Is this mercenary legal practice, or is this the proof that we've all been looking for? Find out in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, guys. Recorded live here in the studio. It is Monday, October 7th, 2019. Valley year of our Lord. My name's Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from across planet Bitcoin. And whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or of course on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in that live chat, guys. Be happy to answer your questions. And hitting the thumbs up button is highly appreciated, as well, as Graham Stephan says, for the YouTube algorithm. We've got a fantastic show for you guys today. Of course, today's episode is brought to you by the Premium Trading Group. If you are a new, experienced, or aspiring trader looking to sharpen your skills and learn from a professional team of mentors, make sure to head over to premium.crackingcryptocurrency.com to see all that the group can offer for you. And I want to thank this month's crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecuritycoin.io. We've got such a great show, so much to talk about. I want to talk about San Francisco Blockchain Week, guys. I want to talk about the Tether manipulation and the lawsuit. I obviously want to talk about the market movements that are happening today and good, better, perhaps ways to trade them, and overall take a macro look at the market and see kind of what we're still working in. Because in my opinion, when we look at everything that we're in, this isn't a whole lot of cause to call mom and ask for more money for magical internet money. But anyways, let's break it down. You guys are going to be your own judge. You guys let me know in the chat if you guys got any questions, what's going on today, how you guys are feeling. Let's head over into the live scene, give away some crypto, and check out the markets, guys. Let's go. Boom, bam, boom. All right, here we are in the live scene. And this is, we're being hacked as we speak. Oh, my dear Lord. Okay, we're going to load comments on Friday's video. And if you guys did not get a chance to go see Friday's video, it was a great show. We had a great time. Thank you guys for coming out for it. Bitcoin Death Cross looming. We went over that. We talked about the statistical relevance of Bitcoin Death Crosses on the daily. We talked about how to trade them, what they really mean, and TLDR, counter trade them generally. Apple says no to cryptocurrency. We went over Tim Cook's approach to cryptocurrency and Bitcoin and how, Apple is not very supportive of that. Big surprise there. And also digital USD inevitable, saying the Fed. And this is a conversation that we've had a lot. I think that obviously we will see the tokenization of fiat currency within our lifetimes, of course. We had 12 commenters on there. Thank you guys so much for the support. We'll randomly pick a winner. And it is Sainsy again. Sainsy, 2 days in a row. Congratulations, my good friend. He says, thank you. That being said, I am keeping an eye on Monero. The new fork next month aims to bring CPU mining to the fore and promotes ASIC resistance. There was a little project that forked from Monero called Nerva that has been doing it for a while now and has managed to be ASIC and GPU resistant. So it is possible. I think that does potentially add value, bringing mining back to the individual, one CPU, one vote. Now, I absolutely agree with you there on the ethos of mining, one CPU, one vote. And it's been kind of, things have changed, man. That's all I can say. Things have changed. But I definitely agree with you here in the ethos, my good friend. And thank you so much for the continued support, Brian. Make sure to get a hold of me in the Discord to get some Spectre and also to tell me what's going on in your life. All right, let's head on over into the marketplace. And I do have this button to press. All right, good. Everything looks pretty good. Everything looks fine. I do have Tether dominance pulled up here, and we'll talk about this to a degree here later. But first, let's go over and get into BTC USD. And we'll go to the Bitstamp chart. Sometimes we switch it up. Today, we're going to go to the Bitstamp chart, and we got ADX down here. We're going to take that off. I was using that for display purposes. Quick premium group update, just so you guys are aware of where I'm at and what I do. gave a beta, is it beta, alpha, beta, something like that? I gave a beta, I guess is the word, demonstration of the new PTP module last night to some students and mentors in the group. And these lines are not relevant right now. It is going to be covering the next component of our PTP strategy, one that we already have on our charts, but one that I don't think that we understand well enough. I want you guys to have a very clear understanding of why all the components, why all the indicators are there, and what purpose they serve. It was a really good session. I got some very good feedback. I haven't finished with the slideshow presentation yet. I will probably finish with that tonight or tomorrow night and have that published this week for you guys. Really looking forward to that, and let me know what your guys' feedback is, as it is my labor of love to bring PTP to you guys. Let's see here. Quick shout out to the chat. Lefty, Nature Bound, good morning to you guys. Taurus, Steve, Jose, Canetta, Ali. Let's see who else MT Coiner, how you doing, man, in Montana, my good friend. And Sainsy is in the crib, man. He is in the house. Crypt Bug, Satoshi Nakamoto, good, my man. I've been wanting to meet you for a while. Let me know if you want to come on the show for an interview. Ron Legato. All right, guys. Let's get into the current markets. Make sure. And thank you guys so much. 80 viewers live today. Thank you guys so much. Just on the YouTubes over there. Don't have the stats from the other streams, because we are very lo-fi around here. Okay. On the daily time frame, we have some interesting things happening. Let's go to Minx. Minx did signal a continuation short on the 4th of October, 2019. That is the position that I'm in. Right around breaky, actually in slight drawdown at this point in time. Price had plunged down to the downside. And you know, what's very interesting, I guess this is a little bit more anecdotal, but what's very interesting is, maybe this is a good opportunity to talk about this. And I hope you're a good friend of mine, so don't think that I'm calling you out. We were watching this move, and I was actually up late, on, pretty much Saturday night watching this movement, and, you know, kind of this plunge to the downside. And, I remember, you know, a lot of people, you know, DMing me who had not gotten into a full risk short. And at that point in time, they were kind of questioning like, hey, you know, should we short this? And I just want to take this opportunity to say that the answer unequivocally, unabashedly, will always be no. For example, if you see a very large green candle and you did not long, and you are asking yourself, should I long? Like, should I long right now? The answer will always be unequivocally, unabashedly, no. If you see a very large red candle and you say, man, I didn't get a chance to get into a short, should I short? The answer is unequivocally, unabashedly, always no. And all you need to do, it doesn't matter if price continues to move. Like, price doesn't move in a direct line. You will have opportunities to get back in, and it's possible that you will miss a trade, that you will miss a big movement. It's very, very possible, right? And that's why monitoring the chart every single day and consistently applying your strategy. Again, what is the whole point of doing this? The entire point is consistently watching the chart on a consistent basis and getting the trades that you are designed to get. There are going to be trades on the chart that are not your trades. The market is going to move all the time, and you cannot capture every movement. Not every trade is your trade. If you're not positioned to take advantage of a trade when price moves, you never chase the trade. All you have to do is look into your heart, look into your soul, and answer honestly. Have you ever taken a reactionary trade off of a very large candle and the next day thought that was a great trade? That was the best thing to do at that point in time. I'm going to say maybe a couple times that's happened to you. More often than not, what happens is price moves down, price moves up. Should I stay in? Should I get out? And you end up taking a loss almost inevitably because you reacted to the market. You reacted emotionally and impulsively to the market. If a trade is not in your wheelhouse, if a trade is not signaled by your strategy, that's not your trade, my friend. That's not your trade. And that's a difficult concept that you're going to struggle with, that people are going to struggle with when they're new to systematic trading. But it's absolutely true. Not every trade is your trade. Can't capture every movement. And don't go chasing waterfalls because you will live to regret it. It doesn't matter if price moves 5%, 10%, or 50%. Doesn't mean it's your trade. It's always no. Jay Kreutzer says, wait, so are you saying that if I see a 15% candle, I shouldn't jump right in? But my friend is telling me is going to moon. When moon, sir? All right, guys. With that being said, Let's look at the technicals of the market. We'll start off on the daily time frame. We'll go down to some lower time frames and kind of see how one could have traded today's price volatility and ways that one could have done that. But let's get an overall macro look at the market. And I think this is going to be very helpful. So let's just zoom out here and let's just look at price. And I don't want you guys, I don't want hate mail. I don't want people saying this has nothing to do with an indicator, Justin. You have no right to speak about this. Calm down, guys. All right, listen. We were trading inside of this meme descending triangle. Of course, everybody is very, very happy to call it a descending triangle right now. When it was printing and when we were up here, people were like, this is a symmetrical triangle, or this is a continuation, or this is a falling wedge, and we're gonna, it's blah, 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 blah. And now that we've broken to the downside, everybody's like, no, I totally wasn't saying it was a symmetrical triangle last week. No, I was definitely saying it was a descending triangle. My TA is on point. Come on, man, just admit when you're wrong and be honest. Jeez, for the love of God. Now, classically, and you guys know that we don't focus on chart patterns around here, but again, classically, we can see, and let's just bypass chart patterns. We saw, and this is the one thing that I pointed out most consistently, we saw subsequent lower highs, and we saw a mixed bag of equal lows, higher lows, and lower lows. Right. So overall, a fairly steady level of demand and a contracting or diminishing level of supply. Okay. That is often a bearish sign, because what that indicates is that supply or selling pressure, the strength of sellers, or bears as we call them, is strengthening. And meanwhile, demand, the strength of the buyers, is unable to push the floor of price up to a higher level. So again, this is typically represented with chart patterns as a descending triangle. Falling wedges are going to be a bullish idea that, you were falling into a wedge, but this is not falling wedge territory anyways. And this is coming from somebody who's studied Bulkowski's chart patterns inside, outside, left, right, up, and down. Still don't like them because I don't think there's a large statistical edge to be garnered from trading chart patterns as opposed to technical indicators and objective reality. But I digress. So we were consolidating after a very powerful rally to the upside in Bitcoin's price. We've had a very nice rally from April 1st all the way, and that rally really ended, of course, toward the end of June. We actually reached the recent all-time high of this year, the yearly high on June 25th, 2019, and we have not been able to get back to that level. Ye old great FOMO day. Now, what this means, what this says to me, overall, this is the way that we have to interpret the market. We have to interpret this as more bearish than bullish at this point in time, because this is just classical. This is just classical Wyckoff theory right here. You have, accumulation, you have markup, you have distribution, and you have the beginning of the markdown phase. And I've talked about, things that I look at to strengthen that overall macro concept, and that really is volume. So if you do zoom out, and I've said this many, many times, volume comes into the market in several key locations. Volume comes into the market when a trend begins. Volume can come into the market when a trend is getting exhausted, or when you're going to have continuation, right? So we do see a slight turn down here. We see a huge sell-off right here at this point in time on, coming off of this volume spike. And then right here at the all-time high, we see a volume spike again. And you can see, I'm not talking about, when I say volume, you can see these. They are visibly evident. They are outliers. They are dramatic outliers from the rest of the volume. So when you see volume and your trending indicators are firing, that is strong. That is a strong signal that you have a high potential to begin a trend. When you have a period of consolidation and then a breakout movement on high volume, that's probably not a stop loss hunt. And although this was a unnaturally volatile movement, we are talking about Bitcoin, which is unnaturally volatile. So we have the beginning of a strong trend generated by, again, trending indications, the leaving of a consolidation period, and a huge volume spike. This is all just very, very basic stuff that, anybody can be on the watch out for. And just, incorporating these into your overall macro analysis of the market can really help your results. So what do we see here? We see that same, we're seeing exactly what we saw down at the lows in 2018 in reverse, okay? We have, a large rally to the upside as opposed by a large sell-off to the downside, a long accumulation period where you have contracting price, and then a huge volume spike in a direction. And this is what the beginning of a bearish trend looks like, right? So, naturally we're below the baseline. All of our more of our indicators are bearish than bullish at this point in time. All of your higher time frame indicators have just flipped bearish, your weekly, for example. And you have to respect that, man. And you have to assume until, if you're looking at price action, there's a few things that you can look at, right? And I've talked about this on lower time frames as well. What would be the first very clear signs that this was a huge sell-off? That this is overall in a macro view of the market, a fake out, and that we are going to see higher highs this year or early in 2020. The first sign that you would typically look for in price action is higher low, followed by so a higher high, followed by a higher low, followed by a higher high, and then a higher low. It's generally that second higher low that tells you, oh, wow, okay, this is actually a shift in market structure, because we have not seen that yet. We have not seen higher highs. We have not seen higher lows. And again, just very classical price action way of looking at the markets. Until you see those higher highs or higher lows, there is no shift in market structure. And you have to assume that, again, and we're trend traders, in a bearish market, in a macro bearish market, all rallies are opportunities to enter to the downside, are opportunities to enter into a short sell. Whereas in a bullish market, all pullbacks are opportunities to go long. Right now, again, that is reversal trading, but that is reversals in the direction of the dominant trend, which I'm okay with. I talk about reversals in the dominant trend at length, both in my premium webinar series and in general when I'm talking about trading. Now, fortunately for us, our actual systematic approach to trading is much simpler than that. I just want to start off with that macro view of the market, because I'm assuming that some of you watching are not, have not gone through the course, do not understand really the systematic way that I approach trading, because everything that I just said doesn't really have an influence on how I trade. I don't take many discretionary trades based off of data like that. I trade a very simple if this then that strategy based on what my indicators tell me to do. My indicators are either true or false or long or short, and they're either all agreeing or they're not agreeing, in which case I don't trade. And that makes my life and my execution very, very simple. And again, if, I've been doing this for a long time, and if my P&L results are to account for anything, it shows that this works. You guys are free to go check those out at results or currentresults.krakencryptocurrency.com. I try to stay as transparent as possible with everything that I do, with the slight exception of not revealing my live open trades until they are closed. You do have to be a member to see the live open trades. Now, having said that, in this situation, I'm looking for any and all opportunities to enter into a continuation short, right? Again, when we see some consolidation after a large movement to the downside, you have a higher probability to continue in that direction. The less likely probability is that you do have a little bit more of a sustained, kind of pump up above. And Bitcoin is one of those assets that does that. Bitcoin is one of those assets that does like to throw very pronounced fake outs and reverse quite sharply, right? So, a movement that would not surprise me from a subjective point of view would actually be to see some movement up here into the $9,000 region, 8,800, 9,200, something like that. And then rejection, right? And again, what would that movement be overall until things change? That would be an opportunity to sell. Now, I am in a short, and I'm not in much drawdown right now. I actually haven't, I'm not really losing too much money, and I'm not going to be doing anything until the daily candle closes, right? We've had a nice movement here today. It's about a 5% candle. It's a little bit longer from actual, from realized low to actual high. It's about a 7% candle in totality from the low of the day to our current, where we're currently sitting right now, which is pretty much the high. We're pretty much sitting right at the high. But if we do look at our indicators, they have not changed. Nothing has changed yet. We do have our noise line sitting at 43.31, negative 43.31, meaning we are in bearish territory. This might be difficult for you guys to see, but this is my initiation level on Minx, which is my initiator, my primary indicator. And when we are below this level, I'm always looking for shorts. So when we're below this black dotted line, and again, I've just customized the way mine looks for the guys in the group who are looking at this like, Justin, what are you doing? Mine, Minx doesn't look anything like that. I've just customized this to how I like to interpret data. And we still have Minx below that. So we'll see if that does change. Naturally, if Minx does cross above the noise line, I will exit my position. And it doesn't matter. Again, is it a whipsaw movement? Yes, but it's the first trade that I've put on in this range. I stayed away from all of this. I stayed away from most of this. And then I put on my short when Minx crossed under, and I was supposed to take the trade. Back here on October 4th, 2019. So right on the close of this daily candle, I took the short. I did not hit. Just go to the ByBit chart to point this out, because this is the exchange where I actually have the trade in. The low of this candle was 7,771, which was about $50 higher than my first take profit. So did not hit my first take profit. And because I only take action when the daily candles close for the most part, for the purposes of this trade, I do trade on lower time frames occasionally. There's nothing to be taken. So going back to the Bitstamp chart. The only way that you're going to moon is weed, my friend. Oh, man. Cryptbug says, stress-free trading will extend a good quality of health and life. It's harder to walk the line than to talk the talk. You're a great example, Justin. Thank you so much, man. I highly appreciate that. I'm trying to, Ali, I'm trying to speak quite fairly slowly today, man. Yeah, Mr. Ether listens to us on 2x. Just wondering, if you have such a black and white system, why not just use a bot? You know, I get that question a lot, and not to derail from the analysis that I do want to complete before we move into other topics, but I have no problem with trading bots. So, you know, I am not a programmer by trade. I've learned Pine, and I'm pretty good at Pine, but Pine is one of those things that, you know, most developers would say, that's not a real programming language. It's kind of like being really good at Pine is kind of like being really good at, you know, maybe working with like some proprietary operating system, right? Like it's kind of like being good at like Cobalt maybe nowadays, right? Like, yeah, you can do great things in Cobalt, but you don't know how to do anything else in real world application type things, right? So, you know, I'm not a programmer by nature. Now, I'm blessed to have some great developers with me, and we're actually working on developing some systems like that. But that is not where I go to. I've made, you know, I've been profitable and successful as a trader, trading manually, and I think my approach works better manually. I don't think that there are a lot of great commercial options out there for most retail traders. I think that if you are programming inclined and really good at that, that's fine. But there's a lot of like little things that can impair the performance of a trading bot. And again, I'm sure there are lots of people out there who can overcome those difficulties, right? But I don't know many profitable retail automated traders. Let me put it that way. I don't know many profitable retail automated traders. I know quite a few professional automated traders who are high frequency traders or who trade other assets or cryptocurrency too. And I think that having the skill to program those is a select few. It's something that seems easy to do, but is very, very hard in execution. So I have no problem with using a bot to simplify certain things. Again, it just comes down to a matter of preference, man. You know, I think that my approach works well on the daily. There are a few elements of discretion. Again, you have to look at your chart, and you might have discretionary position sizing, which is going to adjust how you accept risk, or you might be in a situation where you're going to be trading a reversal off of a demand zone or a supply zone, which I think is very difficult to program into a bot. You know, so. It's like being great at checkers sitting next to chess players. Yeah, man, that's a good point. Gonna need something stronger, home. No, I feel you, man. Trying to keep up, man. Trying to keep up. Cold pressed coffee today. It's been cold brewing in the fridge for about 4 days now, so it's potent. Anyways, okay, let's go to Wadatar Explosion. As a confirmer, it's not confirming our trades. Volatility-wise, we do have an explosion level above the dead zone, which is a way to measure volatility, and that's something that I go over in the newest module. We do not have a rising explosion level, meaning we are moving into a period of reduced volatility overall, and I know that's kind of juxtaposed with the length of the candle, but we have to understand that in our look-back period is a candle like this, and that will throw our calculations off slightly. But again, not when I say throw off, doesn't mean disregard. It means you have to be aware that your measure for volatility is being based off of this big bad boy right now. And that's really what we're looking for continuation to the downside. Unless my indicators switch, I won't be doing anything right now. I'm not overly eager to hop into a long. I do think that, objectively looking at this, we are right at resistance, and we've had a big pump up, I think, really to punish shorters. I do overall think that we are in a bearish environment. Therefore, I'm always going to be biased to be looking for shorts in this scenario. Could we see further pain for the shorts and actually see this range get broken? Yes, absolutely we could. And again, the first thing you would want to be waiting for on whatever time frame you're trading is to see at least two higher highs and higher lows. And because you really do need some strong evidence that we're exiting. But, there are going to be traders out there who are just going to say, yeah, 50 chance if it goes up or goes down, I'm taking the long. So best of luck to you guys. That's not what I'm going to do. I trade, I do not gamble. Parallax, which is our long-term trend indicator, is still bearish, has been bearish for quite a long time. And that flipping as well would make me potentially rethink where we're at in the market. Now, Water Explosion has flipped bullish. However, we're not above neither the dead zone nor the explosion level. So I don't really think this is anything to call home to mom about. Could we get reactionary continuation of this? Absolutely we could. Is it the best trade? Is it the best R2R trade? I really don't think so. I really don't think the long is the best bet at this point in time. Now, let's go down to the 4-hour time frame. And we can see this as well on the 4-hour time frame. I do really want to point this out, man. On the 4-hour time frame, we see exactly what we were seeing back up at the highs. And again, this is subject to change, but this is what we're working with right now. We can't go off data that has not come in yet. We have to work off data that we have. We are seeing nothing but lower highs in the market, even on the 4-hour time frame, going back to the initiation off of the dump all the way back to September 24th. We've seen nothing but lower highs in this area, and we're moving into October, and we've seen nothing but consolidation and a few, I mean literally a handful of profitable trades, maybe one profitable trend on the 4-hour time frame here. I mean, that's clearly that's an 8% profitable trend. There's nothing else here that I see as profitable trades on the 4-hour time frame with a trend following strategy. And that's because, I mean, volatility is extremely low at this point in time. Volatility is extremely low. For the most part, if you look at Water Explosion, the explosion level went below the dead zone, and pretty much from right here onwards, it was like, yeah, do not trade. And then you get over to, actually, no, it doesn't really confirm any of this. You would have been able to maybe get into a short here. And again, it's just not extremely profitable. This is This is mean reversion strategy territory, right? When volatility is very low, this is mean reversion strategy. Mean reversion strategy, let's throw up volatility expander. Volatility expander is a fantastic mean reversion strategy. And when you are in these market conditions, the strategy is you go below the bands, buy it up, go below the bands, buy it up, go above the bands, sell it down, go below the bands, buy it up, go below the bands, buy it up. It's that simple. Range trade the market if you are so inclined to do such a thing. And now this, so let me return to your comment earlier. Phil Son. This type of market structure right here is where I think a bot is a great assistant to you, right? Because being able to capture these trades manually is often quite difficult. But a bot has no problem with these. As long as you know when to turn the bot on, to tell it what to look for, and to tell it what to do. This is a good area of the market. When mean reversion strategy is king, when you are ranging and you want to trade, mean reversion strategy is king. These areas of the market is where trend following trading is going to get you chopped up. And you wait on the higher time frames, like a thief in the night. You wait for the prowl, and you wait to buy back into the market when your trending strategy gives you the long. And I think that there's no other better way to do that than manually. I don't see any benefit to trend trading with a bot. It just doesn't make sense to me. There's no need to. It's simple. Now, you can have a bot assist you, but for letting the bot, you know, drive the car, this is the market structure where you want a bot to drive the car. But you got to know when to turn it off, man. You got to know once you break out and you get a trend, you got to turn that bot off, man. If it's mean reversion strategy. Moving on from that. Now, on the 4-hour time frame, we do have a potential long. I would be hesitant to take that when I juxtapose that against where we are on the daily. So you guys trade safely, do what you want. I'm not taking a long in this scenario. It's not the setup that I'm looking for. I want to see, I mean, especially we've got 2 hours and 27 minutes until this candle closes, and this candle, and over the next 16 hours, so the next 4-hour candles, we're in manipulation territory, right? We've had a pump off the lows. We're back up at the highs where we've seen price reject over and over and over again in this range. And this is not where you want to be trading. This is not where you want to be trading. You'll get the breakout signal when you get the breakout signal. This is not a breakout signal. XRP, drop a meme, sup? And then again, on the hourly, there have been some profitable trends. And again, on the hourly and all the LTFs, when you're in this market structure, this is where reversion to the mean is king. And you can capture these movements a lot better on something like the 1 hour as a manual trader. And you can also capture movements on this with some automated assistance again, I think. And manually as well, trend following strategies manually as well. So let's take volatility expander off and just look at the hourly right here. Let's see, where do we get the minx crossover is right here at this point in time. And you have confirmation here on that very same candle. So you could have gotten into the long on this candle right here on the 1 hour time frame, and you would have gotten out right here potentially. So good trade on the hourly, you would be out of the market and you would be waiting for your next continuation signal or your next movement. As you can see, minx is a predictive indicator. Most people don't know that because as you can see, price is moving up, yet minx crosses under right here, right? And will it continue to, and did price continue to move up? Yes, but minx is telling you that, whoa, buddy, we're getting exhausted. Taurus says, should we get out of USDT already? And what stable coin do you think is safer? You know, I don't want to panic, right? I don't want to cause a panic, man. But that's going to be a personal decision for you. I still have some Tether because I do have funds sitting on Binance. But it's not very much, to be quite honest with you. And I am seriously considering moving that over to DAI. I don't really like to react very quickly. I don't think that Tether is going to implode imminently. I don't think that's like an imminent thing that's going to happen. It's more of a like waiting in the weeds type thing and just trying to see the forest for the trees. Tether remains extremely liquid. Tether remains extremely where it is right now. And we haven't seen a massive drop off in Tether's price. But it's one of those situations, it's one of those scenarios where something like that could happen very quickly. The cryptocurrency markets react very, very rapidly. You know, so you don't want to be caught unprepared, man. You don't want to be caught unprepared. You know, I'm not going to sit here and tell you what I think is exactly the best choice because that's personal. I think that DAI is a pretty good option. I think that DAI is a pretty good option, and USDC is a pretty good option as well. You know, USDC is backed up, so. There are problems with USDC though, but the best option, the best, as I said, I have very, very, very little Tether. You know, all of that could go up in smoke and wouldn't really negatively affect my monetary situation. But the way that I prefer to short is you can just hold your BTC. You don't have to hold any stable coin. You know, you can just hold your BTC on Binance and go over to ByBit and open up a short. That's going to hedge the USD value of your BTC. There's no real need to hold a stable coin. You just hedge. You just hedge with a short sell, right? And that's not going to be available to everybody, but I mean, it is. There's a link for a Windscribe VPN down there and a link for ByBit. Trade safely, guys. That's a big butt, Nature Man. Let's see here. Good questions today, guys. Hope you're doing good today, too, as well, David. So that's kind of it for BTC. Looking a little overextended on the lower time frames. We got some ways to go, though. We do got some ways to go. We got, you know, all the way really up until 8,400, 8,500 before it's like, whoa, hey, we're in clear manipulation territory right here. And on the hourly, we saw this progression of lower highs and lower lows in this bearish trend. And we are going to see our first lower high. We are going to see our first lower high. We have kind of taken out this range, but again, we're coming right up to a logical, you know, this entire area right here is logical stop loss placement territory. So the idea of a raid, the idea that this is a stop loss hunt, a reactionary moving off the bottom, is not ruled out whatsoever in my opinion. Again, what do you want to look for? You want to look for when this movement pulls back a little bit. We're going to see if we get a higher low. If it just, you know, drops out the bottom, well, that's pretty negative. But I would expect that we actually probably get a higher low, at least, out of this movement, and then probably a higher high. And then you're really looking to see if you get that higher low. If you see that higher low, then on the hourly, you're looking at breakout conditions, right? You're looking at breakout conditions because you formed, at this point, that would be almost 3 if you want to count this one, but 2 at least subsequent higher highs and lower lows as well, which can add far more weight to your bullish breakout scenario. But again, I would be taking that trade on the lower time frames on something like the hourly, and I would be waiting to take action on any current trade that you have open in this range, or if you're not trading in this range, maybe even a better thing, on the daily. So logically, in the very short term, if Tether crumbles, Bitcoin would go up. Yeah, I would assume that you would see a big appreciation of Bitcoin's price due to all the capital flowing into Bitcoin. Again, I don't really think that that is imminent. I don't think that that's going to just happen. It could. Don't think it's going to happen right now. I don't think that we should be like in arms looking for that. Crypto, thanks so much for the sub over there on YouTube, my friend. Eternal says, I remember when we hit 14,000, all these noobs came back and some guy on Reddit took out some loan and got wrecked and was crying about it on Reddit. You know what is funny? And again, listen, we've all been there, guys. Every single person watching this stream, and even me myself, we've all been new traders at one point in time. And you know, we got to stay humble. We do have to stay humble because it's easy to fall into that. Oh, look at these noobs over. And I'm not calling you out, Eternal. I get it. It's funny, man. But, try to be helpful to those new people coming in because odds are they are going to get pushed towards the, Fibonacci, trendline, Telegram, pump and dump groups that, many of us got sucked into. And again, most of us lost a lot of money going down that route. So, you always want to be there. I think if you have the knowledge and the experience and you've been around for a while, do your best to be humble and just try to provide your experience and wisdom to these people. Unfortunately, odds are they're probably not going to listen to you, but a few will. And if you can do something to help out a few noobs, push them in the right direction and, make them not have to like wear the albatross of Telegram pump and dump groups around their neck, then I think that's a good thing. That's a very good thing. Off-topic question. What is your PC case model? You would have to ask Scott. I don't actually know right off the top of my head. It's all tempered glass. It's all see-through. It's quite beautiful and pretty. Let's see here. Would this be a good time to place your stop loss above the profit line? The answer is yes. If you got in anywhere around here, yeah, I would be looking to take profit and move your stop loss to break even. There's no guarantee on anything except a Maytag washer, but I think we'll see 20K in 2020. So I do not use fibs at all. No, sir. No Fibonacci's around here. Pedro 10101 asks, what was the name of the mean reversion strategy indicator you were using earlier? It is, so that's my indicator called volatility expander. It's not a massive state secret. It's a customized play on Bollinger Bands mean reversion strategy. They're not Bollinger Bands, they're ATR bands, but the concept is the same. You have a baseline and you have two extensions off of that baseline. And I like using ATR bands, volatility expander, and when it's done, it'll have, be programmed, so it'll tell you what to do. That's how I like encoding all of my indicators. Like, for example, I talked about with Minx, like the way that Minx normally looks when you guys join the group and you get access to the premium indicators. Like, Minx comes out of the box looking like this. There we go. I mean, it tells you what to do. Literally tells you what to do. Go short, go long, take profit, go short, go long, continuation. So volatility expander will be just like that. Yeah, I mean, you just buy everything that breaches the top band, and you sell everything that breaches the top band, and you buy everything that breaches the lower band. And I'll probably program it so it auto prints stop losses as well. The other way to do it, the more common way to do it is you wait until, so if price goes above the upper band, you wait until it comes back inside, till it closes below the upper band, and then you sell. And then you take it down to the baseline or the lower band. And conversely, if price goes below the lower band and it comes back above the lower band, you buy it back up on the way up. Thinking the unthinkable. What do I think could happen to the crypto scene if Tether is a Mt. Gox? Again, so first off, you're going to see a flood out of Tether into Bitcoin. But in the midterm, in the long term, I think Bitcoin's bullish. In the short term, I think it would be good for Bitcoin's price, as in we'd see price appreciation. In the midterm, I mean, that's a tricky one, man. That's a tricky one. I mean, you would have to think that anti-Bitcoiners, anti-crypto individuals would use that to just blast and hammer Bitcoin, man, to just blast and hammer crypto. So it could be really bad, man. We could see final capitulation of the altcoins. That could be the straw that breaks the altcoin camel's back, and they're just, most of them just go to zero. And honestly, and I hate to say this, guys, I mean, because I hold altcoins too, but, not 95% of them are on a slow walk to zero, unfortunately. But yeah, I think you'd see a pump of probably quite a bit of the market, quite actually, a lot of the majors, Bitcoin, etc. Maybe even, some of the low sats, because people would be like, oh, fuck, I can't hold Tether anymore. I got to reallocate. But I mean, I think that you would see it depends. I mean, it depends. I don't really know. I'm going to be honest with you. I don't actually know what would happen, man. It's very, very different from Mt. Gox. It's a very, very different scenario. It's a very, very different scenario with very complicated outcomes. And I think really where we should look is unfortunately, not how it affects the individual investor or trader, but I think that analyzing how it would affect exchanges would be a better indication of how the overall market would be affected, right? You have to think like that. You have to think, okay, what exchanges are holding a lot of Tether? And what are exchanges going to do in response to this, right? Because something like Tether could initiate something like Mt. Gox. So let's think the unthinkable. Let's say that, like tomorrow, Tether is absolutely worthless. Like, Tether to the dollar goes to zero. If you hold Tether, it's absolutely worthless. Doesn't buy any Bitcoin. Like, all your Tether, fucking worthless. Gone. Smoke. Gone. then there are exchanges holding hundreds of millions in Tether, right? Hundreds of millions in Tether. What are they going to do? Are they going to exit scam? And now we have a Mt. Gox for real? That would be bad. And the beauty is we don't need to know where it will go because we can long and short. Watching the big screen, the video is pixelated bad. Probably just my green screen camera. I'm going to put some new lights back there, so hopefully it works better. I decided that I wanted to turn off the big light because it was just overwhelming in here. I don't really like it super, super bright. I'm kind of a vampire. So now I just have my studio lighting. So the lighting's good, but when I put the chroma key on, you need really, really, really bright lights to have the green screen just work like butter. And so it looks pretty good because tricky. But yeah, I mean, you can see like little stuff like around my computer and stuff like that back there. It's not optimal. It's not perfect. Dun, 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 dun. XRP is the standard meme. Let's see here. Let's go to, what time is it? It is 12:48. Okay. So let's take a look at the overall market. Let's look at the altcoin market and give ye old crypto bubbles a nice refresh over here. And, you know, interestingly enough, we're not seeing an overall red day for altcoins. You know, usually when you see a big pump like this for Bitcoin, it's just, you know, like absolute like death. And this is the last hour. Let's go look at the day. And again, if you look at the overall gains for the day, it's actually pretty good, you know. And again, let's talk about this. So it seems like the big news of the day is this lawsuit against Tether. That's what everybody's talking about and what we're going to talk about here pretty soon in the second hour when we get into the news segment. And, you know, again, is this people preemptively moving out of their Tether and buying up altcoins, you know, and this is good. You know, I'm in an Atom trade. I'm up like, you know, 10% on that Atom trade. Very, very happy about it. Link doing well, Lisk doing well, Digibyte doing well. I mean, all the altcoins are doing quite well right now. And, you know, actually, you know, so instead of looking at the overall markets and looking at the individual charts, you know, I did want to do some hypothecating here on some charts. So I wanted to look at the Bitcoin dominance chart here, and it's been a while since we looked at the Bitcoin dominance chart. And Bitcoin dominance chart, obviously not doing too hot, topped out over here on the 5th of September, 2019. We had a steep dive right off the bottom of the cliff, and we formed a lower low, and we're forming, or excuse me, a lower high, following a lower low, and now we are forming a lower low again. Bullish trend, and if we, you know, throw PTP on here, we can obviously see that, I mean, everything is, you know, off to the races, absolutely bearish. And we're actually getting a rising explosion level yet again with, I'd say the explosion level falling underneath the dead zone. But when the explosion level does start rising, that's when you can say, oh, we're going to be above the explosion level above the dead zone filter quite good. You know, and Parallax obviously telling us BTC dominance quite negative over here on the 7th of September. And if one would have started moving into altcoins on the 7th of September, right around this area, right? You know, maybe not immediately, but shortly after we established this this trend, their altcoin gains would be pretty decent. Now, you know, I want to point, with that being said, I want to talk about something about the Bitcoin dominance chart and that it's imperfect data, right? You know, there is a couple people whose analysis that I do respect in the market, and they think that Bitcoin dominance is absolutely nonsense. Fake number divided by fake number equals fake number. And I get that. And I will say this, I mean, this basically makes everything over here kind of irrelevant, right? This is what happens. This is what happens when you have inaccurate sampling of data, right? You have this massive outlier. So when I see this basically means that everything on this side of this huge candle is invalid because they weren't processing data correctly. And everything on this side of that candle is questionable, right? So I'm definitely not saying that Bitcoin dominance is some hardcore, oh, there's so much data to glean from this chart, blah, 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 blah. Not saying that. It is interesting to look at, and I think that one can discern some trends out of there. Again, it's very subjective. Not exactly what I recommend for you guys. But I think that there are some interesting trends that one can pick up out of this. And Tether dominance, which again, same issues, right? Imperfect data, fake number divided by fake number equals fake number. Okay, we've heard it. We got it. Okay, good. But let's just look at where Tether dominance is, right? Tether dominance is on any objective chart, on any objective level, in the ultimate supply zone, right? Tether dominance has come up here to about 2% and plummeted. And all of these plummets, Tether dominance plummets, generally correspond to positive periods for Bitcoin's price. So we've seen this Tether dominance be quite high, and often these are signs of a shift in market direction and trend. This would actually be, in my opinion, a bullish factor. Slap a fib on that dominance chart, man. Crypto Caveman, what's up, brother? Yeah, it's just a reference chart, man. Longs and shorts data. Again, I don't think there's a whole lot to discern from here. This is the longs to shorts ratio. Longs to shorts currently sitting at about 2.7089. You do want to peel a little bit beyond that to kind of discern trend. So there's about 210 million, that's milli with an M, dollars on Finex in long positions, right? And there's only about 77 million in short positions right now, meaning there's far more longs than shorts. But I always hate to say, I'm like, oh man, Bitfinex is, like so negative about Bitfinex on this channel. I'm like, everything that happens with Bitfinex is them just preparing for the end, right? It seems like, I watch back my videos and it seems like that's kind of maybe how I come off sometimes, and if you guys haven't seen it yet, please go watch. I think that it's good education. I think that it's good opportunity to see my articulated point on it. The video on the YouTube channel here is called The Truth About Tether FUD and Bitfinex Explained by a Professional Trader, where I go over all the court documents and I give my thesis on exactly what happened. And I think my opinion is that Bitfinex did not start off as bad people. I think they started off as, a lot of the people involved in Bitfinex were, Bitcoin revolutionaries and Bitcoin believers from the very jump. And they wanted to offer an exchange where they could operate outside the realm of traditional finance and really, again, be the standard for cryptocurrency exchanges, and kind of help serve that thesis, that theory of banking the unbanked, providing access to the exchange for those who were limited by traditional USD. But dirty money got in, dirty fiat got in, and then they set up corporate structures. And they started expanding, and they made millions and millions and millions and millions of dollars, and they got involved with the wrong individuals. And I think slowly over time, their business model got corrupted. Now, it's been my opinion that up until this point, or up until earlier, maybe last year, that overall Bitfinex was still trying to be the good guys, but unfortunately, they got hoodwinked. They got hoodwinked by a few select corporations. They lost quite a lot of money, almost $1 billion of customer funds, and have been scrambling to recover it ever since. And they got pushed into that situation in the very first place by trying to live outside the boundaries of the law. Unfortunately, the Tether thing, there's too much there that's shady, man. K7 Jixer, what's up, man? What do you got for us? So anyways, my entire point is, we've seen obviously since April 2019, we've seen bullish trends in longs. Again, we see kind of that same overall pattern here. This looks very similar to the Bitcoin chart, really, in my opinion, with more pronounced swings. But it's, this looks like potential breakdown of this consolidation range in longs. And again, this is incomplete data, right? This is incomplete data. So, but this is a bearish leaning chart to me, in my opinion. Whereas the shorts, if we look at the shorts, it's not very clear, but higher lows, higher highs, right? But we do not see, full on capitulation from the longs yet. I think we need to be strongly below $8,000 to see long capitulation. Okay. So we've got a whole lot more to go over. We got a few minutes here. So let's just go, we'll just go glance briefly at the Ethereum dollar chart. Obviously, we're having the exact same price per share. Everything looks identical. Bitcoin USD, EOS USD, XRP USD is actually leading the charge. So we see good price appreciation coming in here from Ethereum. Again, exact same analysis, exact same opinion on Ethereum as I have on Bitcoin. EOS USD. There's no discerning discretion to take with these pairs, man. They move in. They unfortunately, at times, sometimes things are different. But often in the realm of dollar pairs, they're just going to move the same, and you want to just maximize having your funds and whatever is going to be the most volatile, right? Or if you want, safer, less volatile, which is generally going to be Bitcoin, right? XRP USD again leading the charge as well with a huge, as Trump would say, nice bullish candle here above resistance, right? Is Chainlink a scam? I don't know. I'm hoping. So I wanted to talk about that a little bit. So I'm going to be at me and the entire team, me, Scott, and Ben. We're going to be at San Francisco Blockchain Week, October 28th through November 2nd. So if you guys are in the San Francisco area, you can come on down. Starting tomorrow, there will be a link down in the description where you can actually, if you're interested in going, you can purchase tickets to the San Francisco Blockchain Week and save 15% with our link. So we can offer people, to the best of my knowledge, this is what I've been told, because we're gonna have because we're I don't know what the word is. We're media. We're media at the San Francisco Blockchain Week. So we're doing interviews. We'll be recording footage. We'll be streaming live down there. And because of that, we can offer 15% discount on anybody that wants to come. So you can use the link and save 15% if you want to buy your tickets and go to San Francisco Blockchain Week. So that link will be down in the description tomorrow. I want to make sure that I'm not saying anything incorrectly. So let me verify. That's just how it's been explained to me and what I understand so far. But we'll be down there. If you're in the San Francisco area, if you guys would like to do a Kraken cryptocurrency meetup, please comment down below or get a hold of us in the Discord. We would love to get something going. If you guys want to get together and maybe do a, just a hangout, go get some steak, if you guys want me to buy you a pint, whatever, man, like just come on down. We'll have a good time. Let me know who's in the San Francisco area, who wants to fly down. We might be giving away a ticket or two over the next month. So let me know if you guys are interested in that. We've said this before. But anyways, Sergey will be there. Sergey from Chainlink will be there. And I've asked to interview him. I don't, now he hasn't responded yet. I should know in the next week or so, like who exactly I'll be able to interview. I'm trying to interview Vitalik. I'm trying to interview people from Zilliqua. I'm trying to interview people from Ripple. I'm trying to interview Sergey who's the developer for Chainlink, the main developer for Chainlink. So it's going to be a really, really fun time. Again, we're on the media team, so we should pretty much get to interview whoever we want to down there, which is going to be pretty sweet. And we're going to bring all that content to you guys. We're going to record. We're going to be streaming live down there. It's going to be a fantastic time. But I don't really know about Chainlink, man. I know that it's been, it's been a good asset to hold. But there's some concerning things about Chainlink on the order books. But again, I don't know. I can't verify any of that data. Follow XYZZ over on Twitter. He's got very strong opinions about it, and I follow him. So. Hey, Jay, how big is your hotel room? We're actually staying at an Airbnb. So I'm pretty sure one of the terms, I would absolutely love to just be like, yeah, man, come stay at that, hotel room. But I'm pretty sure so this is San Francisco, and I think like the house is like the house that we're staying at is like attached to another house, And they're like, yeah, man, like no wild parties or nothing like that. And we're like, nah, you know, like type shit. So, but you know, like pretty much we're just lucky to be able to stay in San Francisco, you know, and not be in a shack, you know, type thing, or like literally like on top of somebody else. Like, so we've pretty much got like a whole little house to ourselves, which is nice. We're going to have a studio set up there to do interviews and stuff like that. But we can try and figure something out, man. Get a hold of me. Can't promise anything. Do I have a schedule for the live streams or off the cuff? Well, I'm going to try and we're going to try and live stream every single night when we're down there, as well as probably be live streaming during the event. You know, we're going to have Scott and Ben and I are going to be down there with some nice camera phones and gimbals and good microphones and everything, trying to record as much as we have on the scene. It's going to be fun driving around in the Tesla. It's going to be a lot of fun, guys. But we're going to try and live stream, you know, some things, you know, live. We're definitely going to be doing our live streams. So we'll probably be doing the live streams in the evenings. That's probably what we'll do, because we'll probably go to the event, record a lot of footage, and then we'll like live stream the footage and maybe live stream some interviews back in the studio. Watch out for cameras in your B&B. They want to watch you. Yeah, man, for real. All right, it's 1:03, man. Whoa, we're past the break time. I got to take a break. I think tomorrow we'll probably use this opportunity to talk about that link. But quick word from our sponsors, guys. I often get asked, as a professional trader, what metrics I use to evaluate a potential exchange. And I always say the exact same thing: security, ease of use, and customer service. In the realm of security, when we're talking about cryptocurrencies, not your keys, not your Bitcoin. So what is the best practical way to secure your coin? Well, why don't you keep the majority of your coin in cold storage and use a leveraged exchange so that you can trade the majority of your account without making a deposit of all of your Bitcoin. So you can keep the majority of your Bitcoin safely in cold storage where you know it's yours, and you can avoid the entire risk of depositing funds onto an exchange. Just a thought. Secondly, ease of use. ByBit's simple to use. I made the switch from BitMEX. If you're new to trading, they've got everything that you want, and you're eventually going to be trading on a leveraged platform anyways, because it just simply offers the best access to pretty much the market and the best way to trade. You know, again, people trade BTC USDT only on Binance, and they are always under the gun, and they're always wondering, do I move into Tether? Do I move back into Bitcoin? When you can simply just open up a short. I think that if you're holding Bitcoin, if you don't know how to open up a hedge short, because if you are holding Bitcoin, you are long exposed to the hilt. You have to be able to hedge with a short. Best way to protect yourself. And customer service. And this is why I switched to ByBit, because their customer service is the best of any cryptocurrency exchange that I've ever used. They actually respond to you. They take care of your problems. I've seen them issue refunds left and right when there was a problem with execution, when there was a problem with anything, and you won't get that on BitMEX. If you guys would like to check it out for yourself and see why I made the switch, there is a link down in the description down below. We cannot offer the monthly trading bonus anymore. That ended on September 30th, where you could get an additional bonus for using that link. I'm in the works trying to get something extra for you guys, but you guys can go sign up at bybit.krakencryptocurrency.com or go to bybit.com/A as in alpha /CC as in Kraken Crypto. We'll be right back, guys. Let me know if you got any questions in the chat. When we come back, we're going to break down the Tether fiasco, the lawsuit against them, the reports of market manipulation. We're going to talk about how Bitcoin's supply could be artificially inflated to over 21 million, and we're going to answer your user submitted cryptocurrency related questions, guys. Don't go anywhere. We'll be right back. And we're back, guys. Thank you guys so much for hanging through the break. We are, of course, back to you with the Breaking Bitcoin show. Okay. Question of the day. Is it a sign that you're old when you are drinking Metamucil? Moving right along. Let's get right into the news, guys. We've got some pretty interesting stuff to talk about. All right. So let's hop over into the news segment. Boom, right here, live in the Kraken Cryptocurrency News Studio. And we are coming to report to you about Tether. So this, the first article that we're gonna go over is from thebitcoinist.org, or excuse me, .com. Tether expecting a lawsuit based on new market manipulation research. So we're gonna go over this together. And, you know, obviously the rundown is that we all know that there are correlations between Tether printing large amounts of USDT and Bitcoin's price pumping. And we do have some new research that seems to put them together. Now, we've seen this before. This is fairly comprehensive. And this will dovetail into what we're going to talk about here in just a little bit. Now, Tether obviously kind of brought the light to this themselves because they did post a press release on their website calling this completely unmerited, calling this completely wrong, that this was predatory, that there's nothing to this, nothing to see here, guys. Move right along now. Obviously, Tether's been under investigation from the New York Attorney General's office for about 6 months now. And it says here that there is a deadline for the firm and Bitfinex to hand over documents come October 14th. Now, we thought, Tether had thought and Bitfinex had thought that they had scored a win because they had, obviously they filed their appeal to dismiss. That was stayed for a while. The case was not dismissed, obviously. And then the judge, who was the ruling judge in the case, Cohen, I don't know his first name, but it's Joel. He ruled that no, man, actually there is some merit to this investigation. You're going to comply with the New York Attorney General's office, which was a huge, led to a large amount of boos and probably an increase in withdrawals from Bitfinex, which, by the way, are finally being processed to the best of my understanding. Now, and so we've all been keeping our eye pretty closely on Tether, or at least those like myself who are kind of looking for the longer trends in the market. And over the past few years, they've just printed hundreds of millions of USD peg tokens. We've obviously gone over how the, kind of the sliding scale of Tether's accountability, because eventually, originally, Tether was backed 1-to-1 by the dollar. And then the entire fiasco came out about how they lost almost $800 billion to Crypto Capital Corporation, which is the exact same company that was involved, was the same processing payment company for Quadriga CX. We reported on that about how if we go in the Wayback Machine and you go to Crypto Capital Corporation's website, Quadriga CX was listed on their website and then it was removed. Like, it just never happened. No, we were never associated with Quadriga CX. No. Not a Canadian exchange that just lost hundreds of millions of dollars. No. And this is something that kind of strikes close to my heart because I have a lot of friends in Canada and I know people personally that lost money in that situation. So how do I put this, guys? The space doesn't have to be like this, right? There are a lot of people who are absolutely comfortable, and generally these people are the people that are behind malfeasance. There are a lot of people that are okay with the status quo, and I'm not. I will always do my best to call out fraud, to call out manipulation, to call out scams, to call out bad actors in the space, because I do think that that is the best thing that somebody in my position can do to try to make the entire cryptocurrency space better for everybody, because this is an asset that I think can change the world. Bitcoin, I think, can change the world. That's why I became involved in Bitcoin in the first place. That's why I do the show. That's why I'm an investor in Bitcoin. I want to be able to pass this better world down to my children. And evil happens when good people stand around and refuse to act. So, not going to be that guy. Now, we have a new study from the University of Texas. It's not new. It was published June of last year. But tokenanalyst.io took this study and applied a little bit of further analysis to it and showed that 70% of the time when Tether prints money, the market rises. Now, Tether claims that their business model is to receive money from institutional investors, mint an equivalent number of tokens, and then give them to their clients. However, Tether makes it clear in their terms of service that they will not reimburse USDT for dollars. Now, that wasn't always the case. That was originally the use case. Hey, we're print Tether, you get dollars back, no problem. It's all smooth, it's all easy, all backed up 1-to-1. And then the entire thing with the Crypto Capital Corporation came to light. XTYZ of Gold, thanks so much for the follow over there, my good friend on Twitch. Now, it's important to note that it was immediately following the public awareness of Bitfinex losing around $800 million to Crypto Capital Corporation, which is a Panamanian-based company. Also, and again, I don't want to spread FUD. It's drugs and terrorism and blah, 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 blah. But again, there's some pretty strong correlation between Crypto Capital Corporation and the illicit drug trade. So you guys are free to go do that research on your own. I've covered it at length on this show before. Now, and this all kind of dovetails into, again, just go watch my video. I explain all this, Bitfinex and Tether FUD explained by a professional trader, where I talk about how in the end, my overall takeaway from this was Bitfinex were trying to be a bank that stood outside the realm of financial liability, traditional finance. And as a result, to get things done in the realm of paper money, they were forced to, they were kicked out of banking relations, and they were forced to look towards third-party payment processing companies to process wire transfers. And that's what got them in the bed with bad actors. And now it's just, Bitfinex has lowered their employment model to, can you bail water? You're hired, in my opinion. And then again, so around that exact same time, Tether's attorneys revealed and Tether changed their website. So check out the Wayback Machine. You can see how it used to be different back in the day. that they're publicly claiming that their Tether is only backed up 74% by their reserves. So for every single Tether in circulation, according to by their own claim, they only have 74 cents on the dollar to back it up, meaning they are insolvent, meaning they do not have the money to back it up. And they say, well, we've got other things. We've got loans, and we've got, we've got deposits, and we've got money that's owed to us. And that's, so overall we're solvent. Totally fine. That's not how it works, man. Now, again, I say that with a little bit of falsity because, this is just how fractional reserve banking works. This is how banking works in general, right? Banks take deposits and they use those deposits as the basis for new loans. This is how banks make money. That's how we have, and there's really, you can argue that there's something wrong with that business model, but that is how banks make money. And what do banks give you in return for that? They give you a safe place to put your money, ideally, right? Because before that, obviously one would argue that the entire idea of tokenization and digitalization removes the necessity of these banks. But then again, custody is always going to be an issue. And I think, we'll get into this when we talk about, could Bitcoin's supply be artificially inflated over 21 million through the use of fractional reserve lending practices? Yes, absolutely it could. Because you still need to convince people to take custody of their own Bitcoin. If you centralize the control, if you centralize the storage of Bitcoin, as we're seeing the trend, we're already seeing it in exchanges. We're already seeing it with custody solutions for institutional investors. If you continue to see that trend, then it is absolutely possible for these centralized institutions to issue IOUs to people instead of Bitcoin. And if those become widely accepted in public commerce, we're right back where we started. So there's no difference between that and having a gold-backed dollar. That again, this is what led to financial, or this is what led to bank booms and bust cycles back in the early days of America, or back in the early days of any country. When they first institute banking, it's backed by gold. And then banks issue IOUs instead of gold, and they issue too many IOUs because they're using fractional reserve lending practices. And there's nothing that's going to stop. Centralized institutions who are holding Bitcoin from this end. But we'll talk about that here in just a few seconds. So now, hold on. I'm getting breaking news from my producer here. Okay, it seems like there has been a new lawsuit filed against Tether. So let's break into the breaking news here. So lawsuit does allege Tether manipulated the largest bubble in human history. There is now a class action lawsuit against Tether claiming that they are part fraud, part pump and dump, and part money launderer. So let's break this down and look at all the important things. So a class action lawsuit has been filed with the New York Southern District Court. It was filed today, alleging that the stablecoin issuer Tether, working in tandem with their sister company, BitMEX, artificially created, quote, as much as half of the growth in the cryptocurrency market. Now, the lawsuit alleges over $1.4 trillion in damages suffered by class members. The plaintiffs describe a, quote, sophisticated scheme that co-opted a disruptive innovation, cryptocurrency, and used it to defraud investors, manipulate markets, and conceal illicit proceeds. Now, we all know Tether is the issuer of the Tether stablecoin, which until recently billed itself as being backed one-to-one by dollars in an offshore bank account. But earlier this year, Tether admitted in response to the investigation from the New York Attorney General's office, and also from the public awareness that they had lost $800 million, that Tethers were only 74% backed. Now, the lawsuit goes on to read part fraud. Let me make that very, very clear. BitMEX lost $800 million and took an $800 million loan from Tether and gave them nothing in return except for a deposit from an exchange or from an account that they cannot access. And they said that was paid off. No, they just took the money, and then they had the Leo, what do you call that? Initial token offering, or IEO, initial exchange offering, which we've seen the price of Leo. BitMEX raised $1 billion, and then Leo just went meow. So greatest buy you guys could have made. Thank you guys so much for pumping up BitMEX's fraudulent activity here. Now, the lawsuit does go on to read, quote, part fraud, part pump and dump, and part money laundering. The scheme was primarily accomplished through two enterprises, BitMEX and Tether, that commingled their corporate identities and customer funds while concealing their extensive cooperation in a way that enabled them to manipulate the cryptocurrency market with unprecedented effectiveness. Now, Tether on Saturday, was anticipating this lawsuit and published a press release on their website describing this lawsuit as, quote, meritless. The company vowed to litigate the case aggressively. I would too if I were you. Dismissing the plaintiffs' counsel as mercenary lawyers, the University of Texas study as cherry-picked and, quote, unpublished. Now, according to CoinMarketCap, Tether does account for a very large portion of the cryptocurrency market, as we all know. and the printing and distribution of the stablecoin are thought to correspond with an increase in market prices, although this may be explained by overseas demand, where foreign investors unable to access USD use USDT as a substitute. That is the main argument against this idea of market manipulation. But the revelations that Tether is not fully backed and the 26% of holdings being in the form of, quote, receivables and cash equivalents from creditors leads many to the same conclusions described in the lawsuit. That Bitfinex and Tether issued billions of unbacked USDT to manipulate the price of Bitcoin and other cryptocurrencies. The lawsuit also describes Tether's ongoing printing of the stablecoin as a brash display of lawlessness, and despite the ongoing investigation by the New York Attorney General's office. Combining this with the analysis that we've just received today from tokenanalyst.io, which points out that 70% of the time when Tether prints money, the price of Bitcoin goes up. So watch out for those whale alert, guys. When lawsuit against the Fed. Now, let me know what your guys' thoughts on this are. You know, I want to end this with saying, because I just talked about Tether for quite a while, and in the first hour of the show. And I've been very, very critical about Bitfinex and Tether on this channel. I don't see a good way out of this. I mean, we'll see. We'll see. Is it possible that the New York Attorney General, that the New York Ag is not able to pin anything on Bitfinex? Yeah, it's possible. But I think that's unlikely. Again, at the end of the day, we do kind of have to wait and see what is revealed in the investigation. But I don't think that it's a stretch, and I don't think that I'm inappropriate for saying that what Tether and what Bitfinex have already done by their own admission is fraudulent. You know, whether you want to call it moving the goalpost, whether you want to call it blatant market manipulation, at the end of the day, my takeaway is still the same. They lost a bunch of money because they were trying to do stuff that they shouldn't be doing. And in response to that, they just went into full panic mode and ended up doing a lot of illegal things. So let me know what you guys think in the comment section down below. I understand if a lot of you vehemently agree with me or vehemently disagree with me. I'm open to all opinions. I just want to have an honest and open conversation about this. And my main concern is that you guys are positioning yourselves in a way where you will not be significantly influenced by this. Now, let's talk about some political news here. Tinfoil hat. 300 ATMs destroyed in Hong Kong as local Bitcoin trading volume surging to new highs. So Hong Kong saw a fresh violence breakout over the weekend as protesters took to the streets and the police amplified their oppressive response. Eli back, thank you so much for the $5 donation, my good friend. He says, if Bitcoin pumps to the $9,000 level, I'm assuming most people will short until we hit low 7Ks or even 6. Is that kind of what people are thinking? Thanks, my man. That is what I am thinking, my man. And thank you. Thank you so much for your continued support. Love you, my brother. Now, Hong Kong. So we saw fresh violence over the weekend, and the police have continued to amplify their response to the Hong Kong protesters as we are seeing an oppressive dictatorship continue to knuckle their way into a society and a, one would say a nation here that has become very fond of Western liberalism. Now, obviously, this civil conflict started months ago over proposed legislation, which included extradition rights of mainland China over Hong Kong citizens, a demand the Chinese government has since scrapped. And again, there have been a lot of arguments that, well, the people that they wanted to extradite are like bad people. Again, you're missing the forest for the trees. The entire idea is that Hong Kong has a lot of dissidents, and China has been ramping up their communist tactics of silencing dissidents. And how are dissidents silenced in communist countries? And they flee to Hong Kong to escape from Chinese totalitarianism. So this extradition law would allow China to extradite Hong Kong citizens or people who are in Hong Kong back to China who are political dissidents, who are revolutionaries, anybody who stands against the communist agenda in China. This is not what progress looks like. This is not what progress looks like for liberalism, guys. Now, the Chinese government has since scrapped that demand. A proposed asset seizure law still remains, in which China could freeze the assets of Hong Kong citizens it deems as suspects in criminal charges. Again, you do the math. This has seemingly led to a flight of capital, with Goldman Sachs reporting an estimated $4 billion, that's Billy with a B, to have left Hong Kong over the summer for its rival, Singapore. Go ByBit. Quote, we found modest net outflow from HKD, that's Hong Kong dollar, deposits in Hong Kong, and modest net inflow of foreign currency deposits in Singapore, said Goldman Sachs analyst Gurpreet Singh Sahi, and I'm not even going to attempt to pronounce that. Ying Zheng Guo wrote in a note to investors last Monday. Again, Goldman Sachs analysts here. Now that follows a decline of 15.6. I know your guys' eyes are glazing over whenever I say these big numbers and talk about traditional finance, but stay with me. That follows a decline of $15.6 billion in foreign currency reserves in August, the biggest since monthly data was first published in 1997. Meaning we have seen in addition. So overall, here's the TLDR: money flowing out of Hong Kong and into Singapore and other safe haven assets because citizens living in Hong Kong do not want to have the threat of their assets being seized by China. This is causing capital flight. This is bad for the Hong Kong economy. Now, trouble now looms for the Hong Kong economy with a sharp decline in tourism due to the protests in the streets, leading to a catastrophic 23% decline in retail sales figures compared to August of last year. Again, not the most attractive destination spot when you've got tear gas being thrown in the streets. Honey, where do you want to go for a vacation this summer? Hong Kong? Bring your gas mask. Now, analysts are warning of a large wave of business failures, bankruptcies, and job losses that will only lead to further instability in Hong Kong. This is what happens when you have revolution. Yesterday, it was reported that 10% of the 3,300 ATMs in Hong Kong were destroyed over the weekend due to severe vandalism by protesters. We already talked earlier about Hong Kong, this movement from the revolutionaries, from the protesters, pulling all of their funds out of Hong Kong ATMs. Another 5% of the operational ATMs were said to be out of cash, while mainland Chinese bank branches in Hong Kong were vandalized and attacked as well. You knocked down my shitty wall. Now, another threat faced by the financial system is the speculative attack on the Hong Kong dollar. Now, as you guys know, or may not know, the Hong Kong dollar, unlike the Chinese yuan, is pegged to the United States dollar with an upper range of 7.85 Hong Kong dollars to $1 American dollar. Now, rumors, however, are circulating that this peg will be breached as the Chinese yuan devalues amidst the trade war with America and declining growth overall in the Chinese economy. This is leading to millions in Hong Kong dollars being converted to USD and other foreign currencies, a phenomenon that we're also seeing happen with onshore Chinese deposits as well. Of course, mainland China has very strict laws as far as how much money you can transfer out of the out of China, how much foreign currency you can hold, what foreign investments you can have. Again, did you guys miss communist nation? Meanwhile, Bitcoin trading volumes in Hong Kong, and I think directly in response to this, have spiked to weekly all-time highs, leading many to observe how global and domestic political instability directly correlate with high demand for Bitcoin, which is the most positive idea moving forward as we move into this realm of potentially negative interest rates across most of the developed nations and the negative impact that that is going to have for retail individuals, not to mention institutional investors, but institutions can somewhat stomach the blow. But this is going to lead to regular mom and pop folks, salt of the earth people, seeing their savings absolutely obliterated and being forced further and further into the market, into higher risk yielding assets. And then what happens typically when that happens, when all of retail money is pumped into the stock market, the bottom tends to fall out. So as the public's trust in the government declines, as it should, rumors of a Hong Kong dollar devaluation, bank account seizures, and ATMs running out of cash, interest in secure and censorship-resistant assets such as Bitcoin are sure to continue surging, particularly among those who cannot easily secure their assets in foreign banks they trust. So, good news for Bitcoin, bad news for society. For stability, go along on the... I can't say it. Thank you, Andrew. Thank you for that charming response, my good friend. And Andrew, I'm looking forward to seeing you in San Francisco, man. Okay. Let me know what you guys think about that. That's obviously very controversial. Let me know what you guys' thoughts are. You know, I think it's, I don't want to overstate this, but I think that what we're seeing right now, I mean, it's one of the biggest, civil rights violations that we're seeing. And we're seeing in our day and age, and we've seen this before, obviously, this is nothing new. But this is what it looks like. This is the violence of the state that you're seeing live in action, right? And people want to believe that we live in a day and age of Instagram and Twitter and TikTok and technology and Apple iPhones and Starbucks and we're safe and the West is fine. Totalitarianism coming to a nation state near you. That's all I'm trying to say. Educate yourself. Now, Bitcoin supply could be blown above 21 million. How could this happen? It's hard coded into the code. Well, of course, we could always just change the code. Miners could signal for, we're going to change the hard cap to 42 million. If they want it, it's just code. It can be changed. But let's assume that that is not what happens and we do maintain our hard coded supply of 21 million. Again, Bitcoin holders may be tempted into fractional reserve practices and real accessible Bitcoin with real accessible Bitcoin becoming more and more scarce as we progress. Fractional reserve lending could absolutely occur with Bitcoin deposits. Now, we all know that Bitcoin's maximum supply is capped at 21 million coins, of which more than 18 million have already been mined, and about 5 to 6 million of those are estimated to be lost. I've seen numbers ranging as high as 8 to 9 million. But the actual supply of coins within the economy may be higher due to various forms of fractional reserve practices. Now, let me put this into very clear explication for you guys. So this is not an issue if everybody is holding their own coins, for the most part. This becomes more of an issue when we have centralized control or centralized depositing of lots of Bitcoin, i.e. third-party custody, right? Now, we've talked about this before. It's almost inevitable that third-party custody is going to be the first, we're already seeing it. It's already how things are now. The majority of individuals hold their cryptocurrency on exchanges. And it is the few, the proud, the brave that hold their cryptocurrency by themselves. And that is the correct way to do it. But gosh darn it, it can lead a horse to water, but it takes a whole lot of arm strength to hold its head underneath there and just drown the sucker. Now, I will say that, this concerns me, and I want you guys to be aware of this. This seems like a FUD show. It's not a FUD show. It's not a scare tactic. It's not clickbait. It's just, these are real things that we need to talk about and address and be aware of and be prepared for when somebody comes at you with rhetoric. Because if we centralize the supply of Bitcoin and we then accept IOUs for Bitcoin because we're like, oh, it's simple, man. Like, what if, imagine this, like this is an M0 type solution, right? Where you have an actual supply, where you have the actual Bitcoin on the exchange. And then because transaction fees are really high, what if we get a second layer solution that tokenizes Bitcoin into a stable coin, basically, right? And now these are stablecoin IOUs of Bitcoin that are instant, feeless, convenient, on your smartphone, NFT payments, no problem, stablecoin backed by Bitcoin, but we have a central issuer of said stablecoins, and we're right back into a Tether issue, right? We're right back into any fractional reserve banking issue where they are issuing more IOUs than they actually have money on deposit to cover, more Bitcoin on deposit to cover. Absolutely possible. And this is all coming from a tweet from Eric Wall, where he says cryptocurrency, a self-stated cryptocurrency expert, warns that there is nothing to stop Bitcoin owners from effectively expanding the supply. This could happen in the manner of banks, which hold on to a portfolio of assets, but can also lend them without losing control. Yeah, banks are thinking, how many zeros can we get after this decimal? And again, this is very similar to how all of these stories that you hear about, Wild West bank runs happened, or early 1900s bank runs happened. You have money backed by gold. You have dollars being issued as gold reserve deposit notes. They're IOUs on gold. The bank issues more IOUs than they actually have gold in storage, and then there's a run on the bank. We can see a Bitcoin run. And then the Bitcoin bank doesn't have enough Bitcoin to satisfy demand. Like futures markets. Done, done, done. Smiles J asks, what is my favorite hard wallet? Team Ledger, baby. Let's read this last part. It says exchanges trade about 1.5 million Bitcoin each day, representing a small, I would say that's pretty gosh darn significant, part of the supply. OTC deals are harder to estimate. The Bitcoin network itself carries between $4 billion and $300 million of transactional value per day, still a fraction of the total Bitcoin market cap of $144 billion. At the same time, the supply of reachable actual Bitcoins is somewhat diminished. Some of the coins that have never been moved belong to the initial blocks, presumed to be mined by Satoshi Nakamoto. Some coins are locked beyond retrieval due to private key loss, and some coins have been seized by states and law enforcement agencies and sold at the top. Newly minted Bitcoin may also be held back by miners to be sold on a specialized OTC market for new coins. Rough estimates show that 30 to 50% of Bitcoin may be out of circulation for some reason. So far, no one has tried to use the locked coins or claim ownership and issue IOUs. Only exception being Craig Wrong, who claims to own the initial Satoshi Nakamoto stash, only without being capable of unlocking the coins himself. Yes, sir, this is the Nano X. Bluetooth on my phone, baby. Let's see here, guys. That's kind of all I have on this. I just wanted to bring this to your attention and have a conversation about it. You know, is this something that concerns you? Do you guys think that this is going to be something that is inevitable? I think that if we centralize the supply of Bitcoin, this is very, very likely to be a situation that we deal with. Again, with only 30 to 50% of BTC that is available in circulation, there's going to be, again, assuming a world where we have overwhelming demand and low supply, that is high incentive to issue more IOUs than we have backed by deposits. And it over and over and over again. So I think it's important to have these conversations up front so that it's part of our ethos as we're setting up the new economy. With that being said, back to the live scene, gentlemen and ladies. Am I bullish or bearish? Bearish. Gold features. Do I have any interview questions that I'm excited to ask? Yeah, actually quite a lot. You know, like, I'm really interested to hear what some of these influencers' thoughts are on the overall market. I have a feeling that, you know, again, a lot of these guys are, a lot of the people, you know, again, hopefully I get to interview some people from like Polychain Capital and Pantera Capital and Blockstack and all these other things. You know, because there are going to be some really successful, you know, cryptocurrency hedge funds down there. And, you know, I guess one of the big questions is going to be like, okay, what do you guys think about the market? And it's always, you know, it's always kind of exciting to talk to people. And again, those are that falls in the realm of people that I've worked with and talked with and my whole life. But it's just always interesting to get them to sit down, talk about how they approach the markets, what they think about the markets, you know, what they think about the overall status of the cryptocurrency markets is. And what's really interesting about talking to, you know, about talking to hedge fund guys is in cryptocurrency, you're going to get some pretty good answers out of them, right? It's not like talking to developers where you always have to think like, well, of course you have a vested interest to make your project sound great and everything, but You know, again, I think there's some good projects down there. I'm pretty excited to interview Zilliqua. I'm pretty excited to interview Chainlink. I'm pretty excited, you know, honestly, to interview Ripple and just talk to them and see what they have to say. And you know, I think I'm going to ask them if they're familiar with Crypto BitLord. But you know, I'm not trying to troll. You know, I'm trying to be very professional and ask real relevant questions. So you guys let me know, like, what do you guys have any questions? Real question of the day, and maybe question for like the month. You guys just let me know. Do you guys have any interview questions that, you know, you guys would like to hear? If you guys want to go take a look at the speakers list, is there anybody who you would particularly like to hear me interview? And what would you guys like to hear us talk about? And I'd be happy to try to facilitate as best as I can. Yeah. Maybe avoid the Finex stand. Yeah, man, you know, that's a problem with being the kind of person that I am, taking very passionate stands. If they're there, love to talk to them. I would love to talk Phil Potter Zeroff. Let me tell you. But I will, you know, Ali, I will definitely ask them when moon. Yes, I'll make sure I include the sir at the end too. When moon, sir. At TGI Fridays, Andrew. Where else would it be, man? I sold you on the pint, mate. I'll see you down there, Brian. Pretty sure we're going to be doing a giveaway for at least one ticket. All right. Don't be mad at me if I'm wrong. All right. I might get off the show and get a call from Scott or Ben, and they're like, no. You got it wrong. Just telling you guys what I know to the best of my ability. Is anyone from the CME going to be there? Options trading opens. So I think it's San Francisco Blockchain Week.io. Did I nail it? I nailed it. So this is the event, San Francisco Blockchain Week. It's split into two events. There's CESC, which is the Crypto Economic Security Council, and that's going to be at UC Berkeley. So I'm just hoping I can walk through UC Berkeley and like hold myself really tight, and I won't get attacked by leftists. And then the other event is going to be Epicenter at the Downtown Marriott Marquis Hotel in downtown San Francisco, November 2nd, or November 1st and November 2nd. There's going to be the San Francisco, or the Blockchain Career Expo on the, or excuse me, I've got it wrong. CESC, the Crypto Economic Security Council, is the 28th and the 29th. There is the Blockchain Career Expo, the 30th. That's also at UC Berkeley. And then the 31st of October and the 1st of November will be the Epicenter event. And then on the 2nd is a hackathon, but that's for developers. You have to be invited. It's not a ledger, it's a vape. That's no moon. That's no ledger. So here's a list of the speakers that are going to be attending. You know, I'm pretty excited to interview Olaf, if I can interview Olaf. We've got Vitalik that's going to be there. You've got Chris and somebody else from Ripple. You've got Joseph Lubin, Samson Mao. Love to interview those guys. But you know, me guys, as an investor and as a trader, I'm not gonna lie, I'm excited to interview Olaf. I'd love to interview Dan. There's a couple other guys on here. Brad Burnham. You know, like these are the, you know, finance nerdy kind of guys that I enjoy talking to. But W1, I'm interested to talk to her. Jesse Powell, CEO of Kraken, love to talk to him. Let's see here. Charlie Shrem will be there. That's always a good talk. Justin Kahn would be there. That'd be a fantastic talk. Here's Sergey Nazarov from Chainlink. Let's see here. Jed McCaleb will be there. Him of the Ripple and Stellar fame. You know, I'd like to talk to Paul from Pantera Capital as well. Let's see here. I mean, just some fascinating people here, man. Just people I absolutely love to talk to. The Representative Warren Davidson will be there. Amir from ZeroX will be there. Let's see here. Yeah, here's Evan from Interledger and Xspring. Yep, Jutta from Parody will be there. Max from Zilliqua, I think I'm going to hopefully be able to interview him. Clarence from Elastos. Taylor Monahan, does some good work. I'd like to talk to her. Sunny from VChain, I reached out to them. Judd from Blockstack, or Jude, excuse me. Let's see here. And I don't think he's on here yet. Let me see if he's on here. Yeah, he hasn't been added, but there will be one other speaker that'll be there. That they're not on this list yet, but Mike Novogratz will be there as well. And I would love to talk to Mike Novogratz. Yeah, all the top nerds. Absolutely love it, man. So looking forward to it, dude. It's going to be a blast. Make sure, yeah. If you guys, if you guys want to, if you guys are going to be in the area, if you guys would like to attend, again, we're going to be selling discounted tickets starting tomorrow. Put that link down in the description and talk about it tomorrow. All right. 12 minutes left for the live stream, guys. I think what I'm going to focus on today, just talking to you guys about my life. I'm going to work on the presentation. I'm going to answer my emails and see if I've got any more confirmed interviews. And I'm probably going to tweet randomly on Twitter quite a bit today. Am I going to download the Poopymon app to avoid the human crap on the streets while in San Francisco? I'm hoping that, I'll be honest with you guys. I have never been to San Francisco before, so this will be a first for me. So I am, I really don't know what to expect, man. I'm going to see if that's absolutely required when I'm there, man. Bitcoin, please go to moon. Yes, I'm going to ask Novogratz if that is his favorite song. Might even play it for him if he is so willing. I wouldn't doubt it. I would not doubt it, Andrew. Let's see here. Let me go to my show notes and see if I can finish off strong and talk about anything here. Okay, so I think I already talked about how to set a trailing stop. Repainting. I think I should do. I don't think I have enough time to talk about repainting. And how to set up ByBit with a VPN. I don't think I have. I mean, it only takes like 5 minutes, but I think I just need to probably record that off stream, so it's a better quality video. When backtesting on TradingView, what parameters should you maximize? Net profit, profit factor, etc. Okay. So that depends on where you're at in your backtesting. And so it really depends on what stage you're at in your backtesting. So when you are backtesting just initiators or just indicators to eventually be part of your trading system, you should be backtesting for neither of those things. You should be backtesting for percent profitability and win-loss ratio. Not on TradingView, not average win-loss ratio, because you don't have your money management system programmed into your Pine strategy tester yet, and you're not position sizing appropriately, and you're not looking at things like continuation trades or discretionary position sizing, which is always those are the tricky things to program in. And that's what that's what we've gone over quite a bit in the course for the Pine strategy building course for PTP, and what we'll continue to cover and develop more nuance around more complicated and more complicated and more complicated scripts. But when you're just backtesting indicators, you don't want to be looking at net profit or profit factor. You want to be looking at percent profitability and number of wins and number of losses. Again, not average win-loss ratio, because average win-loss ratio calculated by TradingView has to do with the amount of money you make on your longs versus the amount of money you make on your short. It's a Kelly bet calculation. And if you don't have your money management system coded in, like how you position size and other trades that you would take, such as continuations or early exits or things like that, then it's completely invalid to look at, because it doesn't matter. Those are just false numbers. You only want to look at percent profitability and win-loss ratio, real raw win-loss ratio. So number of actual winning trades versus number of losing trades. When you get to the point where you have all the components of your strategy, and you've coded in your position sizing, you have coded in your money management, you have coded in your risk, you have coded in your all the facets of your trades, continuations, primary, long and short. If you're optimizing long and short on the same script, I recommend optimizing long and short separately. It's just a lot easier and cleaner. Then you want to spend quite a bit of time debugging and making sure that your money management system is on point. So often the easiest way to do this is, write the most simple strategy in, and then develop your money management and position sizing and risk and all that, making sure that your trade entries and exits are correct, right? Where you're taking profits, how you're taking profits, when you're exiting trades, multiple exit conditions, all of those things. You want to make sure that those are all working properly. And it's easier to do that with like a strategy that's like, I just, to let you guys know what I do, I just default to like a moving average crossover that happens rarely. That way I can go and see, okay, is this taking profit where it should be taking profit? Is this, exiting the trade where it should be exiting the trade? Is the stop loss moving? All these things. When you're to that level and you've programmed in your money management, then you want to maximize profit factor and net profit. And I would value net profit over profit factor if everything is right. Hey, thank you, Philip. Hopefully you're doing well over there in Manchester, my brother. Has Link started a new alt bull run? If you're asking that question, it's probably time to sell. Let's go take a look at the stinky Linky. I've been wrong on Link before. Yeah, so I've been wrong on Link before. About 50% wrong. Here's the thing, man. We haven't seen a lot of selling pressure come into Link yet. So it's hard to say that we're going to reverse this bullish trend. I mean, listen, those are kind of signs in crypto. It's when people are like, man, Link's unstoppable. That's right about when it's going to stop. But again, if something's in a bullish trend, you kind of expect it to continue on in a bullish trend. And again, yeah, regardless of my subjective analysis about Link, again, if you look at what the indicators would have told us, they would have told us to get back long right here on this candle right here, told us to get back long on the 29th of September, to exit right here, and to enter again here, right? So maybe you're using less sensitive settings, or maybe you're only taking partial profits. But again, capturing two aspects of this further movement to the upside from the last time that we talked about Link. So my subjective analysis on this was wrong. I did think that we were probably going to see a pullback or break back down into this channel. That's not what happened whatsoever. We didn't come back down to this demand zone. Still an important level to watch. But I feel like the only thing I can say about this is like, yeah, wait for a pullback, bro. Got a continuation long on yesterday's candle close. We want to kind of look at where we are today. So since all the indicators were firing yesterday and you just didn't take the trade and you're taking the trade today, you can potentially take the trade at full risk. It's not something that I am going to do, but you can potentially take the trade at full risk as long as you respect your stop loss. Because again, when something is bullish, you generally expect it to continue on in a bullish trend. And Link's quite strong, man. But I don't know. If we see a big volume spike and selling pressure, then that'll change my mind. That's kind of what we need to see. We haven't seen that yet. No bearish divergence. No bearish divergence. Parallax is bullish. Wadatar explosion is bullish. You know, I tend to get a little concerned when I see huge Wada columns like this. But, you know, not a massive sell-off spike. But again, you can see that big volume spike on the red candle that follows often. It's not something I'd buy right now. But again, taking subjectivity out of the market, fresh long signal on, fresh continuation long signal yesterday, and we had another fresh continuation long signal back on the 29th of September, which would have had you in both of these trades. So that's why listen to the indicators, don't listen to your gut. Go look at Link USDT. Or better yet, Link USD as calculated by TradingView. You know, again, I don't know how much stock I want to put into this, but we are at a supply zone. Let's go find an order block. So, buying right at a supply zone, don't really like doing that. This is the rejection area. This was the top of the redistribution area after the initial fall off of Link USD. This is in the macro sense so far, and you can't call it a high yet because we haven't turned over. But if we do turn over from this supply zone, it will be a lower high after forming lower lows. And if you are looking to trade some kind of breakout, again, you had a breakout on this range right here, and you had that nice BPC, you had a break, pullback, continuation, which again, kind of lined up very nicely with the indicator continuation signal from PTP yesterday. You would have been in the long on the close of this daily candle, and you take this long up to this supply zone. This is an area where I would take profit if I hadn't taken profit already, even if it doesn't align with ATR because it's a order block, it's a supply zone. And again, you kind of look for that same structure. If we get a pullback with a lower high, again, this is a resistance level that we've tested 1, 2, 3, 4 times. Got a nice pull down away. Approached on pretty high momentum. Approaching resistance or support on high momentum typically moves price in the other direction, at least in the interim. But again, range, you've got a median of that range, and you're looking to form a higher low above the median of that range. And that's when you want to potentially buy and take it back up to resistance and wait for the BPC on the resistance break, pullback, continuation. In the realm of price action, those are the things that I say all the time, and those are the things that I think work for me pretty well. All right, guys. So with that being said, it is now 2 o'clock, and you know what that means. Time to get on out of here. Were you guys hiding over there the whole time? Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. I've been your host, Justin Wise, lead analyst and senior mentor around these parts. I hope you guys go on to have an absolutely fantastic day. Trade safely. It's an interesting day in the market. Nice bullish activity. Keep your head and your wits about you, and don't take trades that your system is not telling you to take. Just don't do it. Trade safely above all else. It hurts more when you lose. It's okay to not take a gain. It's better to not take a loss. But also, just as we saw with Link, listen to your strategy, listen to your system, even if it gives you a losing trade, just do what it tells you to do, and you will have winning trades if you've done everything right. If you guys would like some help, some mentorship in walking through those steps on building a strategy, make sure to check out premium.crackingcryptocurrency.com to join our community. If you want to join our free community, make sure to hop in the Discord so we can keep the conversation going after the show because it is about the community. Again, we've talked about the importance, the necessity of having a strong community over and over and over on this channel. Discord.krakencryptocurrency.com to join our Discord community, guys. Love to have a chat with you guys. Leave your comments below. Question of the day, potentially of the month, is who at San Francisco Blockchain Week would you like me to interview, and what questions would you like me to ask them? Leave your comment in the section down below, and I will tip you some crypto if you win tomorrow's crypto comment giveaway from our sponsor, Spectre Security Coin. If you guys have any other questions, comments, concerns, sarcastic remarks, and or potential death threats, please leave them in the comment section down below, and I'll try to respond to you within 48 hours if it is germane to the conversation. I want to give a big shout out to all our friends, sponsors, partners, members, viewers. You guys kick ass, and I highly appreciate it. Thank you so much for the support. Make sure to subscribe, follow, share, and engage in the comment section. Hit the thumbs up button on your way out if you have not done so already for the YouTube algorithm. Much appreciated, guys. Much love to you guys. Trade safely. We'll be back here same time, same crypto network, 12 p.m. Central Daylight Time to crack some cryptocurrency, guys. Trade safely. I'll see you tomorrow.